All right, good morning, traders. Today is November 25th, 2025. Tomorrow, Thanksgiving Eve, and the day after is Thanksgiving Turkey Day. So, we're going to be closed, by the way, Thanksgiving and Black Friday. Okay, so Black Friday is the day that follows Thanksgiving, and it's a half day tomorrow. Just a reminder on that. I'm going to go over it one more time here. Anyways, I want to thank everybody out there in podcast land, digital land, cyberland. Thank you for following my content, liking my content, leaving kind words, leaving the hearts, leaving thumbs up, subscribing to my content. Special shout out Bob Jordan, John Jordan, Jim Jordan, Kathy Sarah Roasted for sharing the content. Love that. Thank you so much. All right, so my SPY pivot. Oh, get some announcements. All right, before we get started. All right, big announcement. Black Friday sale. Okay, normally goes for about 10K. All right, only $39.95. The other one is Cyber Monday. We're gonna have a sale on the annual. The annual is 12 months, and that's for 1205. I will leave a link in the description. I will post it in the chat. I will put it in the alerts, and it will be in the description of the video. Annual is $1,205, and with the annual you get an extra 6 months for free. So for $1,205 you get 18 months of the BYOB Trading Room. So give that some thought, and you don't have to pay every month or pay every quarter. You can just pay one time, and you're good for, well, a year and a half. Okay, so give that some thought. All right, so there's our Black Friday sale. Thanksgiving, again, I just mentioned it. Wednesday, half day, we close at noon. Thursday, trading rooms closed. That's Turkey Day. Friday, Black Friday, trading rooms are closed. So Friday's going to be in the market. It's going to be a half day. And on Wednesday, I don't know if that's going to be a half day in the market, but I know it's a half day for the room. On Friday, the room is closed. On Thursday, the room is closed. But I'm not sure about Friday. I think Friday is, they close at 1. Wednesday, I'm not sure. I think they close at 4. All right. We'll see what happens there. If I get more information later on, I will pass it on in the next video or in the room here pretty soon. All right. So my SPY pivot this morning, 664.60. Above it, I'm a bull. Below it, I'm a bear. Yesterday, hey, nice day for the markets, I'm going to say. You know, everybody seemed to have made a higher high and a higher low. Not to mention gold and silver started to take off. Oil and gas is holding up. Really nice day. Hey, good morning, Robert. Good morning, Kevin. Really nice day in the markets. That's a surprise. Maybe we get some follow through. And we closed it. And we closed for a lot of them near the high of the day. So that was a very nice day in the markets yesterday. Okay, so SPY and IWM made higher highs and higher lows, closing over bearish traps. Hey, that's a turnaround. And over their 17 EMAs, QQQ and FNGU did the same thing. Higher highs, higher lows. They closed over bearish traps, I'm not sure, but under the 17 EMAs. We'll take a peek at that. Diamond Down made a higher high and a higher low, closing inside a bearish trap over the 17 EMA. SPY closed with a 2-hour uptrend and 10-minute bullish consolidation. Gold in a daily uptrend made a higher low and a higher high, closing over a bullish cross over the 17. Silver in a daily downtrend made a higher low and a higher high, closing over a bullish cross over the 17 EMA. USO in a daily downtrend made a higher low and a higher high, closing over a bullish cross, but under the 17 EMA. UNG in a daily uptrend made a lower high and a lower low, closing under a bullish trap over the 17. US dollar index remains in an uptrend, kind of consolidating up there at the top of the bear flag on the daily chart, big bear flag. So it closed near 100.20 area. SPY max pain for today is We don't like that number, 666, with a put to call ratio of about 1.1 put for each call that expires today. If this is your first time seeing this video, all of these right here are in bullish daily uptrends over the 17. All of these over here under the bears column, okay, are in bearish daily downtrends under the 17 EMA. If they have a little star next to them, all right, it means they're probably building out a bull flag from which to launch higher. I call it a launch pad. You can call it a bull flag. Either one works for me, okay? So from which to launch higher and make another higher high. Okay, so Google making new all-time highs. Just want to mention that one. Okay, bears over here, if you got a little star next to it, it's probably building out a bear flag or a platform from which to dip lower. So that'd be a bear flag, consolidate, investors get worried, okay? They don't want to be the last one holding the bag. Selling begets more selling, and then you get another wave to the downside, okay? So these are all in daily flags, right? Bearish daily flags. If they got a little star next to them. All right, let's take a look at the markets today. See what we can extrapolate, what's going on. This is SPY. You can see in the post-market and the pre-market. I'm going to try to spread this out a little more. And I'm going to zoom in a little bit. Okay, you can see we had a bullish gap up yesterday. See right here? We gapped up, bullish gap up. Bears never filled the gap. Okay, that is a sign of bullishness. That is a clue right there. We're up over the VWAP the whole time. Never even pulled back to VWAP all day. All right, yesterday. Had a beautiful, look at this, 10-minute uptrend, 3 on top of the 8. All right, on top of the 17. Everything is pointed up. Okay, candles riding on top of the 3. 10-minute uptrend that lasted till right there. That's where it crossed. 230, 220, 230. So beautiful 10-minute uptrend. And you know that's my favorite. All right, that 10-minute uptrend over VWAP that resides inside the 2-hour uptrend, that lives inside the daily uptrend, that lives inside the weekly uptrend, inside the monthly uptrend. So you got all the bigger time frames supporting my little 10-minute uptrend, all right? And even better is when it's over the all-time high anchored VWAP. Okay, for me that's really powerful stuff. That's my favorite setup. Just want to share that with you, okay? So that's what I like a lot. Okay, you can see Google making new all-time highs. Definitely got all of that going on in Google. Okay, so here's SPY, 10-minute uptrend. And then we finish out the day into 10-minute bullish consolidation. No clear downtrend, no clear uptrend. You can see just kind of moving to the right. A little bit of post-market activity here. Pre-market activity, we got some consolidation under consolidation here, but we are recovering that right now. So kind of setting up a bullish head and shoulders on the post-market pre-market program. You can see that would be the head. This would be left shoulder and right shoulder over here. So we'll see what happens. Okay, so there's a 10-minute chart. For today, I'm looking for a breakout. My bias is bullish. We held the highs yesterday. We were up near a downtrend line. I'll take a look at it in a few minutes. We'll point it out. Okay, so I'm looking for a breakout over this number right here. 669.81 or a little bit lower. You can take it in a little bit tighter. 669.68, right about there, okay? Looking for a breakout over there. And they need to get up there. Not just spike it, but get up there and hold. All right, so they got to get up there and hold the higher ground. Just like they did yesterday. Just like they did last night. Okay? In the morning, not the same. In the late morning, looking good. See, moving up, holding the higher ground for over 6 10-minute candles. 1, 2, 3, 4, 5, 6. Okay? The seventh one needs to hold here. If I see that, I usually adopt a bias that price is bullish and they are committed to going higher. Okay, if I can get 7-10 minute daily candles holding that higher ground, that's what I like to see. Okay, it very well could happen on the seventh candle they get crushed down to here. We'll see what happens. All right, 10-minute bullish consolidation. I'm looking for the breakout on the upside over here. Okay, if that doesn't happen, I think we probably consolidate for, I don't know, probably the first 4 hours right in here, and then have a breakout at the end of, near the end of the day, or right around 12:30, right around 1:30. Look for a breakout if we consolidate for the morning session. All right, so here's VWAP again. If you see 10-minute candles not break in that bullish or the bearish rubber band candle, okay, then all we do is go back and forth over VWAP, 2 or 3 times before noon. Again, you're probably in consolidation. You're in chop, all right? Consolidation will look a lot like chop, all right? So just kind of stand back. And for me, I like to trade these. Let's see if I can get the drawing tools up, okay? On my bull flags, this is how I prefer to trade them, okay? You can do what you want, but I like, if price went up, okay? If price went up, all right, and it's holding the higher ground like that, okay? You can see price went up, and we're holding the highs. We're not coming back here to visit where we launched from. We're still up here, near the atmosphere, okay? Right up there, okay? And we're holding that area. That is bullish for me, okay? So the way I like to trade it is I like to trade it in this direction from the bottom to the top, okay? From the bottom to the top. Okay, now the first time I get up there, I like to probably exit 90% of my position, leaving 10% in case price wants to rip even further. Then the second time, I exit probably 80% of my position, leaving 20% in case price wants to rip higher. Again, if it comes down again, I will do the same thing, and I will exit on the third time, 70% of my position, okay, leaving 30% to rip higher, okay, and just in case, because the more times we come up here and smack it and put a hole in the brick wall, okay, pretty soon that brick wall is going to crumble and price is going to march forward into higher highs, okay? That's usually what happens in these bull flags. This is creating a launch pad from which to launch higher, okay? So it doesn't make sense to exit all of my position, but it does make sense to capture some profits, and if they get up there and they hold for 6 candles, that's my favorite number, or more, 7 candles, that is a clue they are committed to moving higher, all right, if they get up there and hold that area. And we very well could see them move up here and consolidate on top of prior consolidation. That's a possibility too, okay? And in that case, I will do the same thing, all right? But I will trade from the bottom up to the top. Again, first time holding, exiting 90% of my position, leaving 10 to carry on in case they want to continue on. And the second time, exiting 80% of my position, again, holding 20 in case they want to carry on with that breakout. Again, third time. And the more and more we get up there, the more I continue to hold as many trips as it takes to visit those highs up there. Okay, so that's buy. That is my plan. Okay, if things fall apart and we get underneath this number here, because that could happen, because we are up next to, I'm going to call it diagonal resistance. Okay, we're up to a downtrend line, not the downtrend line, but we're up near a downtrend line that needs to be broken and breached. So we may have passed through it last night, and we may have just tested the backside of it right here, and now we're probably moving higher. Okay, so here's SPY. So if we get underneath this right here, I'll probably look for the higher low and then short the higher low. Okay, break down. I want to see where they recover, make the higher low, and then as price is coming back through, I want to short that higher low back to the downside. And my first target would probably be this area right here. See where price made a low yesterday. That would be my first target. Second target, of course, is going to be the gap fill right there. That's the bottom of that red candle right there. That's to the downside, okay? If they get underneath here and hold, all right, then I'll be looking to probably get price to get crushed and come all the way back here to the breakup candle low right here on the 10-minute chart. Okay, so 10-minute bullish consolidation coming into the close with, look at this, ramping up, ready for a breakout. Here it is, making another trip up to the highs up there. 2-hour chart. Let's take a look at the 2-hour. And you can see the 2-hour yesterday. We left off with, you got the candlesticks riding on top of the 3 EMA. Okay? The 3 and the candlesticks are riding over the 8 EMA. That's the white line. 3 EMA is the yellow line. Okay? So we got candlesticks on the 3 and the candlesticks riding over the 8, and the 8 is riding on top of the 14. There we 17. That is a 2-hour uptrend. Okay, that is the all-time high anchored VWAP, that purple line. Now that will move around. Okay, depending upon which chart you're on. So if you look at this on a 15-minute chart, it may move down. Watch. Okay, see if we can still see it. I will look for it. See now notice it's here at 671.62 on the 2-hour chart. It is at 671.85. You see how it does change around based on what chart you're on. 671.74. Okay, so I'd like to get on top of this all-time high and hold. All right, for like 6 candles. That would be wonderful. That all-time high anchored VWAP right there. We'll see. Now we got a downtrend line that we're gonna have to deal with right here. Okay, so we got a lot of obstacles to overcome. Okay, but you can see right here, this is, even if we get on top of this and hold, okay, we still got to take out this high right here. Okay, that'll put us in an uptrend. But not too much further. We've got a downtrend line just overhead up here, okay, that needs to be dealt with, and so we may have to deal with that. We'll see how fast things move along. I do like this 5-candle green pattern right here, that bull flag. We'll see. If we take out that high, we got on the 4-hour chart, got a possible uptrend. Probably have to take out this high really to get the daily uptrend. But anyways, 2-hour chart, again, 2 hours in an uptrend, okay, into the close, and currently in a 2-hour uptrend. Let's look at the daily chart. And I'll just pick up a clean chart so you can see what's going on here. This would be yesterday's candle. Higher low, higher high, closing over bearish trap over the 17 EMA. SPY. Still in a downtrend. All right, still in a downtrend. They made a low here. They made lower lows. So that's a downtrend. If they take out this high, they will have an uptrend. Okay, if they take out that high or this high, both highs would be preferable. They'll have themselves an uptrend. And we'll see how long they can hold on to that. On the weekly chart, we've got ourselves On the weekly chart, you can see we're in an uptrend, and we got like a 3 candle pullback here, coming back to a green candle right there. And we're still in an uptrend. We haven't broken anything yet. We would have to make a lower low, okay, on a weekly candle that is below the 17 EMA. Okay, so this is the first one you come to. So chances are they'll probably make a lower low up here long before they even breach this one down here, and they'll probably break the low of that long before they get to this. So we'll see what happens. So there's weekly, still in an uptrend. Nothing's broken yet, just a 3-bar pullback or a 3-candle pullback in the uptrend. That is normal. All right, does not mean that everything is over. Everything is still bullish on this weekly chart. Okay, just a 3-candle pullback. Okay, now if this keeps going, it's not gonna be bullish. All right, if they keep putting in red candles with making lower lows. Okay, monthly chart still in an uptrend. We had a bearish engulfing candle on October's candle right here, but we've recovered quite a bit of that right there. You can see we're up to 670 area. Uptrend, you can see daylight, candlesticks riding on the 3. Okay, the 3 and the candlesticks riding over the 8. Okay, all 3 of them riding over the 17. That's the green dots right there. You can see, so monthly uptrend, still intact. If we take out this low right here, that would be the low below the 17. Take out that low, we'll have ourselves a downtrend. So there's SPY on the monthly chart. All right, and I already went over the 10-minute. All right, getting a little breakout happening right now. Let's go back to my lines. Where are my lines? There we are. Getting a little breakout. Want to see it get up there and hold. Nice little breakout happening right now in the 10-minute. Okay, let's take a look at the game plan. Okay, so here it is, right here. Price. Okay, right over. Let's move this back just a little bit. Okay, just drag this down just a little bit right there. Okay, so green erases red over 670.10. That is a bullish green erases red entry. Pivot 664.50. Above it, I'm a bull. Below it, I'm a bear. Okay, and red erases green entry down here. Again, underneath this area right here, taking out the low of that candle, right, that pullback candle right there. Below 658.20. All right, that is my bearish red erases green entry. Okay, this is SPY. This is SPY game plan. Okay, I like 3 days till expiration and 10 days till expiration. Friday options on the multiple of 5, specifically for the open interest, because that provides the liquidity for the market that I'm trading. Okay, I like a nice tight spread. I like strikes. Strikes that have cost me around 30 cents a share to $1.20 per share. Okay, for me, that's the sweet spot. I can defend those, all right, pretty easily. I'm very familiar with trading that 30 cents to $1.20 range, okay? Remember, I'm only trading 10% of my account, so I don't have unlimited funds to work with, okay? So I want to work with something that I can get more than one contract in, and that has room to move as well. Okay, so I trade 10-minute uptrends over VWAP. I trade 10-minute downtrends under VWAP. Now, just to be clear, okay, if I get a 10-minute downtrend that happens to manifest up here long before it gets to the red erases green entry way down here, say it manifests up here, or even here. Okay, so anywhere, okay, up above this red erases green, I'm going to look for it to break the bearish 10-minute rubber band candle. All right, and then from there, okay, I will look to take that 10-minute downtrend lower. Okay, same on the bullish side. If a uptrend happened to manifest, let's say here or here or here, long before the green erases red entry. So I want you to understand, I don't have to wait for price to take out the green line for me to get into a long, okay? If I've got a 10-minute uptrend and the bullish 10-minute rubber band candle happens to break, and this goes for QQQ as well, okay? The price happens to break that bullish rubber band candle, okay, or the bearish one, either one. Well, specifically the bullish one if we're talking about green erases red. If it breaks that, okay, I don't have to wait to take it, okay? I don't have to wait till price gets all the way up here. I can enter that 10-minute uptrend down here at the pivot or down here as price bounces off of this support area, okay? Don't have to wait for it to come all the way up here just to get into my 10-minute uptrend. You can see we had a 10-minute uptrend right there yesterday. Nice ride. I mean, that was from 661 up to, you can see right here, 669. Okay, that's a nice ride. You don't want to miss that. Okay, that's where all the action is. See right there where the 8 EMA, that's the white line on the 10-minute chart. See how the mouth of the 8, that would be the 8, and the VWAP line. See how it gets bigger and bigger and bigger? That's opportunity right there. That's where I make a lot of profits, and it's easy profits too. All I got to do is stay in this 10-minute uptrend. Okay, all I got to do is stay in unless the 3 crosses the 8, or I get some bearish engulfing candles that make me want to take my profits there. Okay, so 3 over the 8. Okay, 3 crosses the 8, trade is done. All right, so trade is done when 3 crosses the 8. Or if you get bearish engulfing, take 90% off. Don't wait for them to come all the way back here and cross the pivot before you're taking your profits and you wind up having a loss that wipes out all of your gains, okay? For a lot of you, all right, I get a lot of this. I do a lot of coaching, okay? I hear a lot of this. John, I make a lot of money. I make my money. I make my goals in the morning time, and I trade the afternoon. You know what happens is the market takes it all back from me. Okay, so let's talk about that. Just cut out the afternoon trading. Grab your goals in the morning. If you want to trade, flip to a paper account and trade the afternoon in a paper account. Grab your goals, lock them in, take that account, move it over to the side, open up your paper account and trade that. All right? Stop giving it back in the afternoon. Just cut it out. Don't even do it anymore. Okay? When you get proficient at the afternoon, okay, then you can slowly add it back into your repertoire of tools in your toolbox to make money with. Okay? So if it's not working for you in the afternoons, there's no shame in stopping trading the afternoons. No shame at all, okay? Your job is to ink out goals, ink out profits, not hit targets, not learn and master trading at all hours of the day, okay? Your job is to, number 1, learn, okay? And number 2, ink out profits and lock them in. Not give your money back, okay? Always, always, always be doing money management, risk management, okay? If it's not working in the afternoon, just cut it out. You do not have to trade it. It is not mandatory to trade it, and there's no shame in not trading it, okay? The big part is for you to learn, and everybody learns at their own pace, okay? Some of you learn faster. Some of you have more time to learn, all right? That's a fact, all right? So everybody learns at their own pace. You do not have to trade the afternoon after making your morning profits on these breakouts that we take, and we make profits, and then give it all back in the afternoon, okay? You can cut that out. There's no shame in that, all right? I just want to say that right now so that I can help as many people as I can. So this is the SPY game plan right there. You can see I just went through that. All right, let's take a look at QQQ. Okay, QQQ, same thing, okay? I like 3 days till expiration, 10 days till expiration, Friday options on the multiple of 5, specifically for the open interest and the high liquidity. Okay, I want to get in, want to get out very easily. Again, I like strikes or options that are 30 cents a share on up to $1.20 per share. Okay, that's for me. It's easy for me to defend that. I trade 10-minute uptrends, same as SPY, QQQ. All right, I trade 10-minute downtrends under VWAP, 10-minute uptrends over VWAP, 10-minute downtrends under VWAP. Okay, so there's QQQ. QQQ yesterday, nice 10-minute uptrend right out of the gate. Right there, you can see the 3 never crosses the 8 until about 220, 230 right there. Okay, you can stay in that trade almost until 230 right there if you want to. Okay, QQQ. Remember, your job is not to hit targets, it's to capture profits. Okay, but try to stay with the trends. There's a reason I picked the 10-minute trend, because it usually lasts a little longer and goes a little farther. Okay, the shorter time frames are not going to last as long as the bigger time frames. Okay, so I picked the 10. Try to keep at least one contract to ride that trend until it actually does cross, or until you get that bearish engulfing. All right, so there's QQQ, 10-minute bullish consolidation into the close. Now we've got right here, you can see we've had bullish consolidation, then we got the pre-market right here, and we've got, I gotta say, it looks like consolidation under prior consolidation. Okay, hoping for a breakout here. Okay, right up there, up over 606.88. All right, looking for a breakout up over 606.88. I'm going to change this now. 606.90. I'm going to change this to 606.90 right there. I'm going to change this to 606.90, not 605.90. Okay, I want 606.90 right on the top of that. Okay, that's where I want to see my breakout. That is my green erases red entry. Pivot 600.85. Above it, I'm a bull. Below it, I'm a bear. Red erases green underneath. Right here, 595.15. That's my red erases green. Okay, so there's my QQQ game plan right there. Okay, I want to see the breakout. All right, breakout over that. They hold 6 candles. I'm interested. Okay, got a 10-minute uptrend over VWAP, blasting through that ceiling. I'm interested in that as well. All right, so there's QQQ on the 10-minute chart. 2-hour chart. You can see the candlesticks riding on the 3 and the candlesticks riding over the 8, the candlesticks and the 3 riding over the 17. We have a 2-hour uptrend coming into the close. On the daily chart, it'd be this green candle right here, that pretty one right there. Nice higher low, higher high, closing over the bearish trap. Okay, but under see the red dots, the 17 EMA. Still in a downtrend till they make a higher high. Okay, erasing this big red candle. Okay, that would be huge. Climbing on top of that and holding the higher ground, that would be huge. Erasing this igniting candle. Now, remember what I said about this right here? Why didn't this work? No follow through, right? Look at what we got again on the bookends right here. No follow through. Okay? This would be huge if we take out the top of that big red candle right there. That would make this look like the exhaustion candle. All right? Instead of the igniting candle. Okay? Again, that would be huge for the market to take out the top of that. Okay, again, no follow through, and what did we do? We ran off and made higher highs. Could it happen again, back to back? I don't know. We'll see, but it's looking good based on yesterday's price action. Can they hold this and keep it going? We'll see. There's QQQ on the daily chart. Okay, still in a downtrend, but in the last 2 days, clearly not moving down. Weekly chart. Bullish uptrend, 3 candle pullback. Okay, monthly chart. Monthly uptrend, 1 candle pullback. Okay, still in an uptrend. All right, let's take a look at IWM. Let's go to the daily chart. And we want the daily chart. We want IWM. All right, IWM. Yesterday, that's this candle here. Love it. See the big candle? Okay, see how we are erasing that? We like that. That's good stuff. Higher low, higher high. Closing over. Looking like a bullish cross over this falling 17, but still under the all-time high anchored VWAP. Still in a downtrend. Okay, we haven't taken out this high yet, but definitely not moving down, moving up. Okay, so higher low, higher high, closing over the bullish cross and over the 17. Remember, this is just one candle. Okay, we've done this before, okay, and it didn't work out. Okay, so let's not get too excited. All right, maybe we got an igniting move coming off this section. We'll see. There's IWM. This is getting exciting if it does. If we get an igniting reversal coming right off of the support area, IWM. Diamond down. Yesterday's candle. Okay, higher low, higher high, closing in the bearish trap, but under the 17 EMA and under the pink line. That's the all-time high anchored VWAP. Okay, you can see that. Here's the quad lines. Still bullish, but in a downtrend. I'm going to go through them all. QQQ. Okay, still bullish, but in a downtrend. Okay, they're up in the bullish territory. All right, still, but they're in a downtrend. FNGU. Okay, remember they broke major support. Well, they recovered it yesterday. We'll see if they can continue with this. Okay, still bullish up here in the upper third, but still in a downtrend. Okay, same as SPY. Okay, so here's our quadrant lines. This would be quadrant 4 way up here. Drag this down so you can see it. Okay, still bullish in the middle of quadrant 4, but in a downtrend. Okay, so we just did diamond down. I just did IWM. Okay, still bullish. See that? I'm going to drag the quad lines over. Still up middle of quadrant 4. Still bullish. Okay, but in a downtrend because they haven't, on the daily chart, because they haven't made a higher high yet. Okay, weekly chart could be different. Monthly chart could be different. See, monthly, definitely still in an uptrend. Weekly chart, still in an uptrend. Got a 5 candle pullback right there. Okay, so there we are with that. All right, let's take a look at gold, silver, oil, and gas. Okay, so let's start off with gold. Gold's in an uptrend. Yesterday's candle, see how we're in the middle of quadrant 4? Higher low, higher high, closing over the trap over the 17. Still bullish, still in an uptrend. Silver's in a downtrend. Okay, silver got themselves in a downtrend they got a low right here that pokes below the 17. They made a lower low. But they're fighting it off. Okay? Just note they're fighting that off. Higher low, higher high, closing over a bullish cross, over the 17 EMA, and over the all-time high, the pink line, purple line, all-time high anchored VWAP. Still bullish, all right, but currently in a downtrend that's not moving down. Okay? That's silver. UNG. UNG is, this is yesterday's candle. Okay? Higher low. No, excuse me. Lower low, lower high, closing under a bullish trap, but over the rising 17, under the 2025 high anchored VWAP. Okay? Holding the higher ground. They were yesterday. This candle, don't want it to break that low because that will negate the uptrend. If they take out that low, they'll be in a downtrend again. They're still in an uptrend until they take out that low. So we'll see if they can hold off from taking out that low. And they're holding the higher ground, something that they haven't done in a long, long time. Okay, so there's UNG. They're still bearish, all right, because they're down here in quadrant 1. Okay, if you're in the lower third, for me, you're bearish. If you're in the upper third, you're bullish, and you're in the middle, you're neutral. Okay, still bearish, but in an uptrend and doing a lot of the right stuff. And a lot of the right stuff is that ability to hold the higher ground. Okay, so we'll see what they want to do up here. UNG, bearish, but in an uptrend. Okay, USO. So you can see USO, right? Here's the quad lines. Okay, so this would be the upper third over here. This would be the lower third. Okay, so we're not bearish or bullish. Okay, we're in neutral. We're neutral, but we're in a downtrend. Why? Because we make lower highs and lower lows. So USO, downtrend, but neutral right there. Okay, let's take a look at technicals. T2101. Okay, so we moved up yesterday. Remember, the market moved up, and the breadth, aka participation, dipped. Okay, that's really not what we want to see. Okay, I like to see when the market moves up and the participation and the breadth moves up, but instead we got the opposite effect. So that's an outlying concern right now. Okay, the fact that the market's moving up, I'm all for it. Okay, but the breadth and the participation diminishing just a little bit, not crazy about that. But here's the good news. We are in an uptrend as far as the breadth goes, from this low up to this high. So that's kind of good news right there. So I have to find the silver lining. If that's what it is, that would be the silver lining, in that there were times that the market moved up before, all right, and we dipped a little bit, but we're trending higher. So that is good news. T2101. T2122, we came down to the seller's chop zone, had some coffee, and then we left and spent the rest of the day in the buyer's chop zone up here over the midpoint. So good job for the bulls getting it on the other side of the half court or the midfield or the 50-yard line, okay? Getting it on the other side of the 50, okay? The bullish side of the 50, okay? That is great news for the bulls, bringing it up here to the buyer's chop zone and holding the higher ground. Again, something we have not been able to do for a while. See here, lost it. All of these days, didn't have it. Had it here and lost it. Okay, so we'll see what happens. All right, so that's where we're at right now. Let me move this over here. This one over here. Okay, buyer's chop zone. Camped out all day. Nice job for the bulls. T2123. Okay, this is nothing impressive going on here. We're still on the 15-minute chart underneath 200 SMA. Again, not my favorite place to be unless I'm a bull, unless I'm a bear, excuse me, not a bear. This is the support line from a prior head and shoulders. We didn't close underneath it, but we are right on top of it. I wanted to see a red rubber school ball bounce. I clearly didn't get what I wanted for Christmas. You can see that is not the red rubber school ball bounce. We left off with, let's see what we got here. Okay, with 15-minute uptrend, okay? Because we made, actually we're still in a downtrend. Right here, see this low? Still underneath this lows here. And we have not produced a higher high. We need a high to take out there. So we're still in a 15-minute downtrend, even though we went up and we held over the support line. Again, under the falling 200 SMA. Again, moving way out. This is the all-time high. Okay, you can see we're clearly all the way down here at the bottom, okay, of quadrant 1. All right, so the 15-minute is kind of bearish and still in a downtrend, all right, for making that lower low. On the 3-bar chart, same product. I'm going to take this off. Again, under the 200 SMA, but the 200 is not falling this time. It's flat. Still underneath the 17 EMA. That's the red dots. You can see here's the support of a prior head and shoulders pattern that got decapitated, okay, to produce the all-time highs. And we're resting there right now. Hopefully we can find some spinach, maybe some red meat, and make a run out to 200 one more time. All right, we'll see what happens. Okay, so there's T21.23, 3-bar chart, just barely hanging on to the upper third. Remember, the upper third is the bullish. Okay, just barely hanging on. Okay, so price currently in a downtrend, lower high, lower low, lower high, lower low, barely hanging on to the upper 1/3. That would be bullish right there. That's T21.23. FNGU made some headway yesterday. All right, notice they moved up. They held the higher ground. That's bullish. They're in a 15-minute uptrend. Nice bullish gap up, not filled by the bears. This would be the major support line, this green line right here. They recovered the major support. They broke major support, and then they recovered. And I said they needed to do that. 15-minute, clearly in an uptrend because we're making higher highs right here over the 17 EMA. So you got higher low, see that low, higher low, see the high, higher low, big time higher high up there. Up over the following 200 SMA. That's my place to be because I'm a bull. Under the all-time high anchored VWAP, I like the fact that we're leaning on it. If we keep poking it and poking it, eventually we will break through the brick wall, okay? If we keep knocking out bricks, okay, eventually we will get through this brick wall of all-time high anchored VWAP. We'll see. Google's doing great numbers, making new all-time highs. So there's FNGU. Let's hit the economic package and wrap this up. Okay? All right. Dollar. Start with the dollar. Dollar, all right, in a downtrend. Let me spell it out. Okay? Okay, moving down and then over to the right. Okay? Bear flag. Okay? From the bigger perspective. On the daily chart. Okay? They got a low here, higher lows, higher highs. See the high here, higher high. Higher low, remember the low here, higher low, higher high. Higher low, okay, maybe a failure to make a higher high at the top of this bear flag. We'll see what happens. They are consolidating up here. That is a good sign. If you like strength in the dollar, me particularly, I don't like it. Okay, I'd rather see the dollar in a daily downtrend. The fact that it's moving down would be bullish for the markets. Okay, weak dollar makes our goods and services more affordable to foreign countries, which means we take in more revenue. Okay, when they buy more, okay, of our goods and services, we take in more revenue. More revenue translates or transcends usually into more profits. So we'll see what happens. Dollar still in a bear flag, but in a daily uptrend within the bear flag. Earnings calendar. Let's start with Tuesday. Okay, Alibaba's going to report 260. My eyes aren't that good. 353 billion. Going to report this morning. Okay, not a market mover. Okay, definitely help out the tech sector or the retail sector. I think Alibaba's retail. Okay, BHP still looking for the P&L. They were looking for it last week. Analog devices, I'm pretty sure that's tech. Going to report in the morning. That's odd. Okay, tech usually reports in the evening. 110 billion, all right? So nothing here is going to move the markets today. Wednesday, that's tomorrow. 128 billion, okay? John Deere, okay? Deere and Company. Nothing here that's going to move the markets. Okay, that'd be heavy equipment. Thursday, we're closed. Obviously, you got dashes. Okay, so nothing happening Thursday. Friday, we're open for half day and nothing reporting back to Friday. Familiar names, but nothing here that's going to move the markets there on Friday. Okay, we got through the earnings. We did the dollar, economic report. We're getting a lot of delayed reports. Okay, so PPI final demand, the delayed report. Remember, this is old news. Comes out at 8:30. Retail sales report, the delayed report, comes out at 8:30. Okay, this is old news. That's the old news. Case-Shiller Home Price Index, 9 a.m. They're going to have a home price index. If you didn't get one, we're going to give you a second one just in case you didn't like the first one. All right, FHFA Home Price Index, 9 o'clock. Consumer confidence, 10 o'clock. Business inventories, the delayed report again, another one that's delayed, coming out at 10 o'clock. Pending home sales index. So you got home price index. Now we're going to give you a pending home sales index. That's coming out at 10. Richmond Fed Manufacturing Index. Here's another index in case you didn't get enough of it already. 10 o'clock later today. Tomorrow, all right, durable goods, 8:30. That's the delayed report. Again, that will be old news. Okay, durable goods present report, that will be the new news coming out at the same time. Okay, GDP, that's the main event. That's coming out at 8:30 as well. International trade in goods and services, 8:30. Jobless claims, 8:30. Corporate profits, 8:30. Retail inventories, 8:30. Wholesale inventories, 8:30. Chicago PMI, 9:45. New home sales, 10 o'clock. Personal income and outlays, that will be a big one, 10 o'clock tomorrow on Wednesday. Petroleum report at 10:30. Okay, max pain for today, like I said, 666 with a put-to-call ratio of 1.1 put for each call. All right, that's it for me. All right, I'll see you guys in about probably 20 minutes. Let me get this video out there. Thank you. Thank you, everybody. I'll see you in about 20 minutes.